What I have in this envelope here is what I call the get out of jail free card in an IRS audit. My name is Merrill Taylor. I'm a CPA. I've been preparing taxes for 20 years and helping clients with tax situations, helping them save hundreds of thousands or millions in taxes through strategies. Now, why I say that this is a get out of jail free card is because what's contained in here are receipts. I so many times get clients that come to me and they say, do I really need to save my receipts? Is my credit card statement enough? Are my bank statements enough of a documentation? If I write on there what it's for, is that okay in an IRS audit? The answer is no, it is not okay in an IRS audit. Because what happens in an IRS audit is that the IRS requires, and the tax law requires, 2 items of evidence for every expense. Number 1, proof that that expense was actually paid. And that is what the credit card statement or the bank account statement shows, that those funds actually left your account and went to somebody. They were actually paid. That's all your credit card statements do. Number 2 is that they require a proof of the expense, meaning that it was a valid business expense, which is what the receipt shows. If I looked at these receipts, here's one from Costco as an example. You can go to Costco and you can buy clothes that aren't a business deduction. You can buy food that might not be a business deduction. You can buy pet supplies that aren't a business. There's so many things at Costco that you can buy, but you can also go and buy a TV that is a business deduction. You can buy desks, you can buy computers that are a business deduction. There's so many things that you can buy at Costco that are a business deduction. So Costco is one of those stores that you can buy things personally or you can buy things for business, and the IRS wants to see the receipt. As I pull out my Costco receipt here, here's Costco. The IRS wants to see that this itemized list of things all relates to business and is not related to personal. An example of that is that we had a client that was under IRS audit that we were working with, and they had deducted kitty litter as a deduction. The way that the IRS knew that it was kitty litter was that they looked at the receipt. They had this list of things that they had deducted. They deducted some office supplies in there. And the IRS says, well, we want to see these office supplies. They went to Walmart and bought office supplies, so it was coded as Walmart. And so the IRS says, Walmart, that's probably a personal expense. We're going to disallow that. We want proof of that. So we went to the client. The client was able to provide the receipt, the Walmart receipt that showed the list of things. That's where the kitty litter showed up, was on that list. And that's when the IRS says, well, we're going to disallow that because that's not a business expense, that's personal. We were able to explain to the auditor that the client owned an auto repair shop and oil falls onto the floor and kitty litter is used to soak up that oil. So we were able to prove a business use of it. So that's an example from start to finish that the IRS audited them, wanted to look at a specific expense. The client had documentation for that expense, and then we had a story to back up why that expense was a business expense and not a personal expense. So I tell all my clients, keep your receipts. I do as well. These are not organized, right? This is just thrown into an envelope. It has 2024 marked on it. So these are some of our receipts for 2024. Every time I go and I buy something, my train of thought is, okay, number 1, I'm buying something. First off, is this a business expense or is this a personal expense? If it's a personal expense, I pull out a personal card and I deal with it personally. If it's a business expense, I pull out a business card, I pay for it with the business card. The person asks me, would you like a receipt? I always say, yes, please give me the receipt. I put that receipt in my pocket and I make sure I bring it into my office. I stick it on my assistant's desk, who happens to be my wife. So I put it on her desk. She sticks it in this envelope. If I ever get audited by the IRS, I've got it all documented here and good to go. Now, another thing to keep in mind is that IRS audits don't always happen immediately, right? They never happen immediately. It's not like you file a return one day and you get audited the next. And so, all these receipts here for 2024, I'm going to file them on a tax return in 2025. I am an S corporation. My tax return is due in September. honestly usually procrastinate that because I'm busy doing everybody else's taxes. So I'm going to probably file my tax return toward August or September of next year, which means that by the time I file my return, some of these receipts are going to be going on a year and a half old that were from January of 2024. But even then you don't get audited right away, right? The IRS has 3 years to audit that return. So I file a return in August of 2025, let's say. The IRS has until August of 2028 to audit that return. And so by that time, these receipts are going to be pretty darn old. And what happens to receipts? They fade, right? They don't stay good forever. So I always tell clients, keep the physical receipt, but you can scan them in if you want to have actual documentation. So yes, go ahead, scan them in, but you know what? The IRS is pretty old school. They don't really trust technology because, I don't know, because their technology just kind of sucks to begin with. So they don't trust it, so they want to see something physical. So you can hand them a physical receipt that's faded and shows nothing, and then show them the scan that says, well, you know, that doesn't show anything, but, you know, here's the actual scan of it. So if you wanted to do that, you can. So anyway, keep your receipts. It will document your expenses. Again, I hold on to them all. The IRS will always audit certain things like meals. It's a guarantee. They're going to look at that in an IRS audit. So anytime I go to dinner and I deduct it as a business expense or go to any sort of meal, I always get the receipt. I write on it who was at that meal, what the meal was for, keep the business documentation on there. And then I hold on to that. If you get audited by the IRS, they will pull that meals category, almost guaranteed, but they don't audit every single expense in that category. What they do is they say, please give me a list of all of the separate transactions that go into this meal. So maybe your meal expense is, you know, let's say it's $5,000 that you paid in meals that year. So you'll give them a whole list of how $5,000 all adds up during the year. And what they do is they take that list of expenses and they stick it in a computer program. And that computer program then goes through that expenses and selects certain receipts to verify. It's kind of like just a process that they go through just to verify things. And so the computer system will spit it out, and the IRS auditor will say, okay, out of your 100 meals during the year, or whatever it is, 50, you know, whatever that number is, the IRS is going to come back and say, we want to see these 20 receipts or 30 or 10 or, you know, whatever the number comes back. And so that's where you kind of run into the receipt lottery a little bit. It's not like if you have receipts for, you know, half the meals that you're going to be fine because you can prove half of it. It's going to be that they're going to have very specific things. So if you can then take that list from the IRS auditor that says, show me these receipts, if you can provide a receipt for every single one of those that they asked for, then they agree that those are all valid and good, they will say, okay, that looks good, and they will close the audit of that specific thing. They'll say, okay, meals look fine, we're not going to bother you. But if they come and say, okay, we want to see these receipts, and you say, I didn't keep receipts, sorry, then the IRS is going to say, well, you have no proof of documentation, we're going to disallow all of the meals because you can't provide 15 receipts that we wanted. So that's why I keep every single receipt. I keep them in an envelope. We hold on to those. If there's ever an IRS audit and they pick specific receipts, I'll go back and dig through this and find the receipts that the IRS wants, show them to them, and it closes it and moves it on that way. So if you can't tell, I'm a huge advocate of keeping receipts just because I've been through IRS audits and I know the nightmare that comes from it. Just hold on to the receipt. Just ask for it, put it in your pocket, and make sure it gets into a folder or gets somewhere where you can hold on to it. It doesn't have to be fancy. This is just an envelope that sits in a desk, and it's just there in case of an IRS audit. So if you want more tax tips and more tax advice, make sure you subscribe to our channel and go to taxtutor.com, subscribe to our newsletter, and we'll send you weekly information about taxes.